Hi everyone, this is Carlos, and in this training video we're going to talk about and how to use one of my main indicators that I use every single day to confirm the overall trend of the market. This indicator alone will tell me with about not 80% probability, to be quite honest, of what I should be looking to do within the next trading session. So this is a 1 hour chart. I'm just going back in time because I just wanted to show you. Let me squeeze this in here now that we're talking here. Take a look at the most recent market behavior. This is the past week. It is completely nonsense, going nowhere. And take a look at the difference of the previous weeks. All right, so this is a trending market. This is what we were looking for. Okay, so one way to plot this and try to find out about this consolidating stages, like in this case, even though in this case we're slightly upward. Um, is it kind of difficult and wild market as well, but it was sloping upward. This is a type of trades that we're looking for. All right, so when will you encounter something like this? Well, obviously, you immediately what you wanted to do is just plot the high and perhaps the low and stay aside and do nothing while one of those area is broken. So if you notice on the latest on one of the latest forecast, the market just broke above the channel, and then we plotted the synergy zone and it stopped us out, and they definitely wanted to go short in this case. So you'll never know about the market, but there's one way that we can indicate with high probability what is the most probable scenario, and the ones that I use is the MACD. Here it is. Let me show it to you. I'm going to blow it up a little bit. Okay, and I want to show you how it looks and the reaction of it. And this is a 1 hour chart. Now I don't follow it on the 1 hour chart, but I want to start off with a 1 hour chart because this is the main reason how we construct our forecast and how we use it in conjunction with the 4 hour chart. So this is a 1 hour, and also the main one that I look is on the 4 hour chart. So basically this is what it is a MACD, and here it is. I'm sorry, these are the parameters of the MACD. All right, so to be straight and simple, I'm going to show it to you. These are the parameters that you want to type it down. All right, so I think I'm going to have a download, or I'm going to send it through the email somewhere, but I'm going to download this same template. All right, the template of this page on the 4 hour and 1 hour chart. You're going to be having it, so you can just upload it to your MetaTrader and you're done. But you can plot this anywhere. The only thing that you need is a MACD that plot with line is a line MACD. It doesn't have any histograms on it. All right, that's the first thing you need to work with. And the parameters, it's on the fast moving average, EMA exponential moving average, it's 8.38, 50, and 9. All right, so once you have that, this is how it looks. So basically, remember, this is a 1 hour chart, and I'm gonna start from this point on. It works like a stochastic. Okay, if they cross to the downside, the possibility of this trade is to go short. The market goes down. If they tend to cross to the upside, obviously in this case it was gyrating, so the market was consolidating. Once it crossed to the upside again, it was still inside. You will plot your trend lines like so. Breakout came right in here, where the stochastic, the MACD, it's completely crossed to the upside on a buy mode. Okay, so it's very straightforward and simple. Once they cross, you can plot resistance and support lines. In this case, it's like so. This is the bar that crosses above the trend line, and it probably point out in here. And if you notice, the MACD is crossing to the upside and has a wide gap in there, so it's sloping upwards, and the market just shoot up. In this case, giving you the opportunity of perhaps capitalize on 120 something pips. So anyhow, this is a basic function of what we're looking for. Like in this case, I'm going to point it out. Here's a cross, so this is a possible buy. Market slightly went up. This is a sell, possible go short, and the market went down. This is a buy, but flattish here. But this is a possibility of market to go up, and the market just went down. Didn't work out in here. Obviously, this is on flat mode. Market sideways. We got trend lines. This is a buy, and the market broke above, and up they went. So if you notice, out of 1, 2, 3, and 4, 3 out of 4 were positive, and 1 was a loss. Okay, so once again, this is basically when you have to combine a couple of things, but in this case, if you notice, the MACD crossed to the sell side, so the more expectancy, the most probable situation here, so for the market to drop down. All right, so in this case, the bar came at so from that point on, market went down a little bit. It bounced, but still, these guys are still below. Here's a cross. Now that's a continuation to the upside, and the market kept going up. Noticing it? Notice right there. Okay, cross, possible cross to the downside. So we got a bottom here. What we can do is immediately mark that bottom right there and wait to see what happens. Market gyrated. Another cross to the downside, possible downward move. You see how wide they came up to be? That's a very nice sell mode. Market gyrated while the market's still loping downwards. Here's another. Still bearish, looking for confirmation. Still bearish. Here's a tendency to go down. They broke it, but they're still holding. And finally, they broke. Okay. So if you notice, it was quite difficult, but slightly in your favor if you stay to trade in favor of what the MACD is telling you. All right. So that's basically what it is. That was a cross, then another cross. There's a tendency to go short, even though this is sloping downwards and this was sloping upwards. You have your trend line. That's a broke over there, second broke over there, confirm over here with another cross, and wide open, and the market went down. All right, so now you got the idea. So let me switch now to the way that I use it, which is the 4-hour chart. Now this is going to be interesting for you guys because the 4-hour chart is the one that I plotted, because first of all is the charts that the major traders use for their positions. It's more sustainable, one, and number two, when the MACD crosses, the possibility is that for the next couple of 4 to 6 or 8 or 12 hours, or 12 bars, which is 4 hours each, they're going to sustain in one way. Once they cross, it's going to cross. Once they cross, it's going to cross. So I'm going to show you how it looks. And this is just start right here. We got a sell here. We got to buy here, we got to sell here, we got to buy here, and we got to sell here. Let's just compare this. Oops, sorry, let me do that again. Sell, buy, sell, buy, sell, buy. So in here we got a potential sell, and the market went down. Here's a potential buy over here, and the market sustained a buy mode until the next sell mode, which is right here. Okay, here's a sell, and we should look to go short the market, and the market went down here. All right, and this is a buy. The market should go up, and the market went up. This is a sell. The market should go down, and the market should go down. There you go. And it kept going down until otherwise specified. Here it comes across. That's a possible buy or reversal point. Sideways situation, as you notice, immediately. You see how the MACD reacted, like they just crossed and then crossed back down. This is a very warning situation that this is going to turn into a sideways situation. Immediately, I look for support and resistance lines using trend lines. Very simple technique. And wait for the market to dictate a side and confirm with the MACD. Let's see what happened. Market went up, confirmed by MACD. We can go up, we can go long. Obviously, let's see. This bar dictated by, so we could have certainly went long in here. It's confirmed by this guy. It's over here. So let's see the reaction of it. And you hold it until you otherwise specified, and the cross came back. There you go. So if you notice in here, we went long in here. So that's a 1, 2, 3, 4, 5, 6, 7. Very interesting. 7 4-hour chart, meaning that you have plenty of time to collect profits before this happens. Got it? Since we're day traders, we're just collecting this. No, we're just projecting areas where we can go long and short on the lower time frames, but we're just following through on the 4-hour chart. Okay, so remember what I told you. This is a triangle here, famous triangle. Measure it 189. You measure 189 from the breakout. 189 would be, there you go, at 6763. Let's plot that. Let's see what it is. 6763. Around that area. Pretty close. So enough time. So we got 8 hours. About 20 hours here. It's about a complete day. That was a whole move of one day that we could have collected 100 and well over 100 pips. All right, on that breakout, 130 something. All right, so guys, this is basically the way that I use. It's very straightforward and simple, the MACD. It's just a matter of you sitting down and trying to understand it and follow it through. So just for the sake of explanation and before concluding this training video, I just follow through here. All right, so here's the sell opportunity. Once the blue line widen out from the dash line, is a possibility to go short. Obviously, this is an outside bearish bar, so we got double confirmation here. And I do have a small triangle here. See how cool this is? We got triangle here, broken down, outside bearish bar, widen out. This is great sell opportunity. 4-hour chart. The next 4 or 6 4-hour charts. 16 to 20 hours is going to be probably to the downside, so I can hold this for half of the day, the complete remaining of the day, and I can project into the future the possibility of having a 237 pips. Let's see if that actually happened here. We broke in here. 237 will put us right at there you go, 64.40. 64.42. It's right there. All right, around there. So let's see the result. It didn't work out. Hold on. Let me just once again. There you go. Right there. It's bottoming out. So I'm keeping an eye on this guy. Still bearish. And here it comes across. Right there. So that was a cross. So this would have been obviously a break-even point based on the same level that we went short. But to be quite honest, since we're day traders, we don't trade out of the 4-hour chart, we trade out of the 50-minute chart. In this sell process, we were able to pull in probably around 160 something to 90 something pips, which is basically what we're looking for when we look at it on smaller time frames. I just wanted to give you a rough idea of what you can, how you can use this. All right, so that's a buy. Market should go up, and the market did went up. Here's a sell. Market should go down. They broke a couple of support lines, and market did went down. Should look how nice that one over there, bouncing, crossing to the upside. Now that looks to go up. What is this? Sideways channel, no trading at all until one of these ranges are taken out, confirmed by the MACD. Take it out. That's a wide end. That's a great buy going up. The market reversed. Here's a cross going down, and the market did went down. Cross up, and then cross down again. All right, so this is a sideways channel. Broke up, widened out, they're going up, and so on and so forth. I guess you got the idea. All right. So in this case, the market just, if you see it, like in this case, as a cross, as a downward move, the market went down, and let's see where we're at. Okay, in this case, sideways channel, and if you noticed, the reason why we went long a couple of days ago didn't work out, it was in here. Okay, let me show it to you. You see how wide this was on this run, like so. So the tendency would have been to the upside. So then I come on and create my synergy zone on the lower time frames and double check with Elliott wave and all that stuff to find a probable reversal point, following through that these guys are wanted out, looking to go long. If you notice, the market reversed abruptly and down they went. Okay, now they're doing the retracement back to the synergy zone or area, and these dudes are still bearish. So the whole purpose of the market is, first of all, they broke major support lines. That's a obvious. They broke major support lines here as bearish. The market has won down more than 300 pips. All right, in this case, that's to the downside. That's still, and remember the tendency that I explained to you, I believe on the day on the forecast video of that day. The market did 1, 2, 3, 4, 5. So we're into wave number 3, which is one of the longest one that we're looking to capitalize. So this is wave 1. This is wave 2. So we're into wave 3. Will be over here. Okay. This guy actually is having are telling us that, you know, how wide they are, that the probability to probably retrace from that point could still in place. But since the market is being reacting crazy, well, we just have to wait until the perfect time, which is starting our analysis at 1 a.m. Eastern Standard Time, in order for us to follow through. So as we speak, and I'm doing this video, it's only 11:53. The market looks like it's accommodating itself pretty nicely. So if I switch to the 1 hour chart, the 1 hour chart is bullish, but if you notice the width of this two line in comparison with this two, well, it's certainly a probable retracement or correction from all the sellers that took advantage of this drop. Okay, so I hopefully that by 1 p.m. Eastern Standard Time, which is about 2 hours from now, we could see some resistance point and the market start consolidating, and this guy's turning into the downside. But I will take my first look at 4 hour chart, see what's going on. Still kind of bearish. Then I switch into the 1 hour. If this guy stays like so by the next 2 hours, if this guy's turn, kept themselves just like this wide, well, I will certainly use my trend lines to dictate a move confirmation. Wait for the prices to actually pierce down the trend line, and then I will enter immediately and use the top of this retracement as the stop loss. And I know that the synergy zone is actually somewhere in here. I'm sorry, it's already in there. So I will, instead of using the top of the zone, I'm going to lower to the top of the pivot and try to write everything down, following through what the 4 hour chart is telling me, which is that we're still good to go. What? Short. All right, so this is the way that we use the MACD. If you got any questions whatsoever, just let me know so I can put another video and explaining to you how to use it. So once again, this is the plot. This is how you plot it. 8.3855. I mean 9. It is a MACD DMA, the Napoli V1. I'm going to be making this one available to you absolutely free of charge. And this is the first things that you look at every time that you're going to start looking at taking a trade. First things you blow up is this chart here. If these twos are crossing to the downside, the most probable scenario, it's a downward move for the for the next probable 4 to 8, maybe even 16 hours. Okay, then you can do is double check with a 1 hour chart by that time, and what you do is you immediately come here and draw trend lines and wait for the prices to pierce down the trend lines. All right, and once they do, you can go short in that area. Okay, and use the previous pivot as your stop loss. Alright guys, this is Carlos Diaz from Forex FX. This is a training video of how to call upfront the high probability trade, high probability trend on your next trade with up to 2 to 4 hours prior to it happens. Alright, so stay tuned for the next videos that I'm going to be uploading. Thank you very much. Have a great remaining of the day and happy pip hunting.